The other thing you noted the other day is that China and the other BRICS countries or Global South countries, they're moving more and more towards trading amongst themselves in their own currencies, but they're also buying a lot of gold as a monetary reserve. And I think it was someone in Congress that questioned Scott Bessent about it, and he did mention that it looks like China is looking to back its currency with gold. That would be another like not a tailwind for higher yields, treasury yields, because it means foreign countries they're going to be buying gold instead of treasuries. And do you think that's going to push the U.S. into thinking about gold as well in the system?
Well, look, I've been of the theory that I think the US is the one also participating in the accumulation of gold here in the market. I think that that's also pushing gold prices higher. Bessent tweeted back in October of 2025 that the rise of gold prices has been helping the government because their balance sheet has obviously improved. But keep in mind, we're talking 3% of the overall, less than 3% of the overall balance sheet of the government. So it's very small, particularly when you look at compared to how much debt we have in the system. And so keep in mind that in the 1940s, the US gold reserves used to back about 50% of the US debt. Today is about 3%. So that's a major shift, right? I mean, if we price gold as if we would have 50% of our debt in gold, gold itself would be probably marked at around $70,000 an ounce, which is crazy. Now, I'm not here to say those things here, but that's the just a mathematical equation of getting back to normal standards, if you will. So, look, I just think that what we're seeing worldwide with those news of China that you mentioned is that the world is thinking now back again about bringing back discipline, and not because they just want discipline, it's because they're being forced into that, given that fiscal and monetary instability that we're seeing worldwide. And that's going to go, we're probably going to go more and more towards that path of other currencies that will be looked to be backed by gold. But in order to have that, they need to have the gold first. So gold is in a very critical position as a macro asset for the next 5 to 10 years, in my view. If we are with central banks' balance sheets, really heavy on gold, I would change that opinion, but that's not the case here. Now, we all know they're all chasing one thing, and that's gold. And if that's going to occur here in the next few years, it's going to change a lot of things alongside with that. I can't speak for silver in the near term. Your guess is as good as mine, but I do think we're seeing some digestion of a very big move. This is just an interpretation near term, but silver is poised to go significantly higher. If gold deserves to be higher, silver deserves to be massively higher too. So we're in a bull market for metals, in my view. We're far from being done on that, and a lot of the mining companies are still being priced as metals are going to fall. And if anything, they keep rising. It's not even stabilizing. They just keep rising. And so there's a lot of repricing that needs to happen in the mining industry as well. Very exciting times for those that are investors in the space. We invest in every place, but I think one targeted aspect that we're going to be looking to break the stigma of the industry that it takes 10 to 15 years to go from exploration to production. Looking for these companies you can't do that with the entire industry. So looking for these companies that have strategically in a position where they're either stuck in the mud for whatever reason and need capital or some sort of rearrangement of their current business to get back or to get into production quickly, to get into cash flowing stage quickly. I think that and one of the main reasons why institutions have shy away from the mining industry is this lack of conversation about when are we going to go into production, when we're going to go into cash flowing stage. Now, outside of the big senior guys, the other part of the industry is kind of left behind with the dreams and of getting into production, but it never happens. And so trying to tackle that part of the industry very well would be one part of my plan. I still really like targeted positions in exploration, and the other side of me that has, I would say, created, especially myself, most of my wealth has been structuring the right deals in the mining industry, and certainly will continue to do that. Meaning. Acquiring assets from majors or buying distressed assets for whatever reason. Now, that's one thing, one area that I think I can add a lot of value. So we're going to go there as well. And that's going to be part of a whole package of a portfolio, very focused on mining, but lots of angles there. I call it three pillars of investments in the mining space. I think Trump has he obviously fantasized that idea in a large way and extrapolated in a way that it's not necessarily true factually. However, the government is in a position. I remember looking at a chart a few years back that showed how much we're paying in interest payment relative to GDP. And, we're approaching 4 to 5% now. This is a very dangerous path that we're in. And I would say that there's no other economy that is the size or similar size, I should say, of the US or any other developed economy per se that has anywhere close to that level of a deficit. And so this is a real problem. I would say that, if we take it down to call it, let's say to zero, which eventually I think we're going to have to go somewhere around that, it's going to help tremendously the deficit issue. Then the question becomes, what does that do to hard assets? And what does that do to the repricing of a lot of other things, and especially inflation? I think that the US has hit a wall of debt, especially from a government standpoint, and it's going to be very difficult to get out of this outside of reducing rates substantially. And so I do think we're going to go down that path. And that's the bottom line, regardless of the message that he was saying in regards to being right or wrong, or factually right or factually wrong. I think that clearly there's a financial suppression, message that is much larger than anything there. And I think that a lot of things are mispriced relative to the world that we may see in the future. And you just think about this for a minute. We just changed potentially the Fed chair here with Kevin Warsh. And the idea is that he's going to cut rates substantially. In that interview, he does say that he thinks he made a mistake hiring that person. I do think that if your goal was to take a very extreme dovish president of the Fed to take over that leadership, I do think that President Trump is right. That probably was a mistake. But nonetheless, Kevin Warsh has been very openly talking about how he wants to cut rates drastically. And if that's the case, look, you look at the curve of the market of how many rate cuts we're expecting 2 years out, and it's only two rate cuts of 25 basis points. I think, I believe that there's a very strong case to be made that we're going to see a lot more cuts in the near future. And that part of the market is completely mispriced. So gold is making, coming back to $5,000 an ounce, silver at above $80 an ounce. And we haven't even seen yet that pricing of interest rates change drastically here in the near future. That could be another tailwind for all these things. And so very exciting times to be in the metal space right now.
Yeah, and you said they could even take rates down to zero, they've brought it down from above 5 to 3.75, and the 10-year yield went from 3.6 when they started cutting, and it's still above 4. I noticed that the 30-year yield is almost at the same level it was a year ago, so the curve is steepening. And I feel that unless they do something artificial like yield curve control, if Warsh cuts rates aggressively in the coming year, yeah, do you think they're going to institute yield curve control? And I think that would be even more a fuel to the fire of financial repression and fuel to the fire of the bull market in hard assets, gold and silver.
Yeah, look, policymakers are very clever, and in terms of the situation of how to express some of these ideas. And yield curve control, I think, has a very bad connotation, just like QE. And it wouldn't shock me if they try to go anywhere around that term, but it's gonna look like it, yield curve control, but we won't be able to say that it is yield curve control technically, which doesn't change the impact that it has in markets. What I'm trying to say is we could see your classic yield curve control coming from the Fed or coming from other institutions like that, or you can also see a place where there's a deregulatory changes in especially in the banking